Good afternoon, Maverick traders. It's the 15th of August. Wow, that's fast. I took my kids to school today. I can't believe that. Let's get into a market roundup. I've got my 2 cents on what I saw in the markets. I've got some things to talk about it. It's my opinion. Take it for what you will, right? But take responsibility for the outcome. So let's jump into the market analysis as we had a negative reaction to a brutal economic report. Empire State Manufacturing Index massively lower, down 31, over 31 points. One of the lowest readings it's ever had. Now the markets shook this off. It was interesting to see that all three were down, and all three ended slightly higher. Let's just gloss it over. We'll call it a 0.5%. Nasdaq a little more than that. The Dow and the S&P slightly less. We'll call it about a 0.5%. The Russell's a third. So oil dropped another 3.5%. When you see a number in the manufacturing index as negative as this, you know there's an economic slowdown, at least in the U.S., let alone globally. 3.5% drop in energy, or oil specifically, and gold down over 1%. Not a good number for us, the day-to-day people that want to keep a job, that want to go out and spend money. Excellent for people who want to borrow money and put it in the stock market, which is why the market's moved higher. This is my opinion, folks, but I've seen this many times. So let's just jump directly into it. So here's the SPY. You can see we had this nice little base at about the 410 level. We talked about this for a little bit, and then all of a sudden we actually moved higher. We did push above that 420 mark, and we are now climbing. Now, guys, I'm very comfortable in the way that these markets actually did ignore this news, that I don't think we're going to be very inhibited up to the 440 level on the SPY. I don't see much getting out of the way. We're coming out of earnings. Some of the earnings were decent, some weren't bad, but a lot of investors were buying into it regardless. So I think a slow, steady march up to the 440 level resistance, I don't see anything in its way. I don't, except for some unforeseen news. So I have to really agree with what Darren and Rob were talking about on Sunday. This is a super bullish surge, a bullish market. Everything seems to be doing pretty well. So let's just jump over the Qs. The Qs have been outperforming for quite a while, but they also have their level, which I'm comfortable talking about, at 340. This might hit it a little bit earlier than the other two, right? The Dow and the SPY. And then we could see maybe a march a little bit higher to maybe a 350 level. I am trying to play this a little bit less aggressive by, hey, look, we're getting into the transition of out of the summer into the fall, going back to school, all those fun things that we can talk about, coming out of earnings. But the investor seems to be glass half full here and confident in putting money into the markets. So I'm going to stick with this outlook at least for the rest of this week and into next. Now, guys, take a look at the heat map. Everything participated. The only things that didn't, once again, energy, a little bit of the basic materials, stuff like that. When it comes to the overall worries of a global slowdown or economic slowdown, yeah, your demand on energy and growth should subside. But it was interesting to see the surge into the tech. And once again, these stocks have been beaten down for quite a while. Not recently, but take a look at go back to the chart and take a look at how far we did fall from the top. We have a lot of investors that believe the worst is behind us, obviously, and that when it comes to putting money back into the markets, now's a good time. It's basically your opinion versus theirs versus whatever you got to want to do. However, let's get into the markets in front of us. Now, guys, I can see that my monthly outlook is definitely a +2, above the 20, above the 50s, 20-50 slope. We just broke above resistance set in June there. Looks awesome. I don't think these markets are going to be inhibited too much versus unforeseen news or maybe some profit taking here and there up into those next resistance levels. In fact, with this SPY chart, I just showed you guys the 440, even up to the 450 levels. So shorter term, I'm always cautious shorter term. You guys know that. I feel a little overextended over the last day. It's only Monday. We'll see where we go from here. I imagine we set some sort of a base, so I'm going to stick with a +1, meaning I am super happy buying sideways stuff, and if I'm going to err, it's definitely going to be to the bull side. We just trade those markets in front of us. So potential trades, I just pulled this from our class on Sunday. I've got a couple of sideways trades and other bulls to look at. Bearish, nothing really struck my fancy. That might change over the next few days, but I'm not going to waste your time. Let's take a look at the stuff that is working. This is Starwood Properties, talked about on Sunday. Most of these will be, and I do like the fact that this is bleeding higher above resistance of 24 there. 24.5 to 24 3/4 would be a nice little target. I'm going to go ahead and draw a line here, guys, for you. Up in this area, the resistance that I saw, boy, back in end of March, geez, that's pretty far away, and into April, I believe that we could revisit this. The volume hasn't done anything outstanding, but it's not like it's completely falling off the map. It's just kind of, hey, get out of my way. People are going to put money into what works, and this is starting to work right now. Diagonal spreads just jump out at me all day long. Vertical spreads, stuff like that. Credit spreads below support levels, so a $24 below that, maybe some sort of a bull put spread. Something sideways to up might be kind of fun on this. All right, let's move over to the next. This is JCI, another one that did trigger. Boy, actually, it was triggering on Friday pretty aggressively. I kind of wish we caught this on Thursday. Now, it does have the potential, and this is kind of a fun trade, guys, if you're into it, to close the gap. And what I mean by that is we have this nice little gap here from, actually, I should go above it. I should go more to the 62 level. But what I'm trying to get you guys to see is from where it opened and closed, think of all the ground it's gained since the beginning of May. I mean, it really had to deal with, if I can switch to my pen here, a bunch of pain. It came back down here. It set some lower lows. It had to come all the way back up to this 56.5 level and move higher. So now that it's back up above this point, it's referred to a closing or open gap. I'm going to move over to my line to draw this. So there's a gap area where it closed before some sort of announcement or price action to where it opened again and closed. So I'm going to draw a line from the previous open, the beginning of May there, and then the previous close, or I should say the next day's close. This is the gap it needs to retrace. As you guys can see, it is right in the middle of this. So we do have resistance, which will be the last pivot point set before the gap to the downside, which is at 60. Let me draw this line a little bit more, a little deeper so you guys can see it. That's going to be the first line of resistance. The second line of resistance, and I believe the more important line, will be the 62, which is right where this thing started in the first place. All right, there's your breakdown of how a closed gap works. With the momentum these markets have, playing anything above 58, target of 60, longer term target of 62, all of this makes sense. Sideways to up, I'm behind it 100%. Could be a fun trade. Let's move over to on. This is the last bull side move, and it did confirm really well on Friday. Darren and Rob were both talking about this, and I love the fact that it did gap down. Take a look at this, guys. If you focus a little bit more on the close of Friday and the open of Monday, that is a gap to the downside, and it retraced it. 70 is definitely the mark on this. We just want to make sure that this thing can stay above it, and I believe it can. I mean, if the markets continue to stay as strong as they are, I think that, boy, even less than 70. Sorry, folks. I'm drawing support levels here. Yeah, so it's got some room to wiggle, but if you want to be super aggressive to the bull side without being overextended, the way that this is, you could play something around that 70 mark from sideways to up. I like it. I like it a lot. So let's move on to the two sideways trades, and both of these could error to the bull side. That's right, folks. It's really tough to have a day like today and look for bears because we're just not getting any of them. So let's take a look at something that could be sideways. We'll start here. This is kind of the line in the sand here at 48. You can see it's above it. It had this beautiful move to the upside right here. Take a look at that. Love that. I love the ascending triangle pattern that's gone. It's popped its head out. Boy, I'd say Thursday, Friday of last week, and it looks like it wants to revisit maybe that $50 level, right? The $50 level from the previous area. Let's draw a line across it here for you, right there, right there. So it just depends on how aggressive you want to be to the upside. It's hard for me because I feel we're a little bit overextended. It doesn't mean that we're going to turn around and fall apart or anything. It just means it's hard for me to jump into anything after the surge that we had at the end of the week, thinking this thing's going to hit 52, stuff like that. But anywhere between the 48 and the 50 level, sideways, right? This is a sideways stock. Sideways up makes sense. So if you guys want to target a butterfly 48, 50, 52, or you're comfortable thinking that it's going to hit 50 and revisit 48, you've got a 46, 48, 50 butterfly. I could totally see either one of those. MRO is another sideways trade. Let's get in my lines here because what I like about it is resistance here at the 24, right? And then we've got some pretty good support. I won't draw that far back at 22. Now past that, we do have, let's get my arrows, a little bit of a slope to the downside and a little bit of a slope to the upside. So we've got a symmetrical triangle pattern above the moving averages. Keep that in mind. So I want to be glass half full here. Well, above one moving average and using resistance of the other moving average. Sorry, between the moving averages. So sideways to up, playing this somewhere between the 22, 24, 26 level would make total sense. If you guys aren't sure if these markets are going to continue higher or base or pull back, some of these trades are cool. Just give it a wide berth, right? This is Marathon Oil. It's in energy. Energy is a little bit more volatile, right? It's going to be more reactionary, but playing it above the 20 or below the 50 and or below the 50 makes sense. So just a couple things to look at. Mondays are tough, folks. It's very difficult to get into a trade that you can commit to on a Monday, especially after things change. We did have a horrible number with the Empire State, and the markets just shrugged it off. So it's extremely difficult for you bears out there to see how horrible that was, get bearish, and all of a sudden just get wiped out because these markets do not want to move lower. That's one thing I will echo from Sunday's class. You just can't be bearish here. You just can't. Even if you want to be, you can make the argument for it. You're correct. That's great. That's fine. The markets just aren't moving down. So, moving higher, manufacturing slowdown. A slowing economy could mean less action needed by the Fed. I'm trying to justify the reaction to it, and that's exactly it. Hey, that means interest rates might not be as aggressively raised. This creates more opportunity for the investor. Economic-wise, we do have retail sales and jobless claims. Now, jobless claims are going to be a little bit delayed, but if that manufacturing index has completely dropped as much as it says it has, we would expect repercussions when it comes to employment moving forward. Keep an eye on that jobless claims number. Retail sales, if the consumer does not slow down, the economy will not slow down. That's been the biggest caveat to this whole move. So keep an eye on both of those. They are both out this week. Earnings reports, I didn't see anything to make mention. Just check your potential trades. Just make sure you run it through the gamut because we are on our way out. We should be, the majority of them are out there. So anything moving forward, just double check. All right, guys, that's all I got for a Monday. Thank you for joining me, and we'll talk to you next time. Goodbye, everyone.